subject to these obligations.
Mr. Chair, I would like to talk about clauses 26 and 73. This is about disclosure information of the Australian Tax Office about borrowers who are or may be overseas based. Now, the issue this is trying to solve is one of the key problems in collecting overseas student loan payments is holding up-to-date contact information for defaulters. You know, if you can't get hold of them, then how can you liaise with them or correspond with them? And many of these are believed to have lived in Australia, and what this will allow is the exchange of information that's been talked between the IRD, but to receive up-to-date contact details of New Zealand student loan borrowers residing in Australia through matching details against Australian Tax Office database of Australian taxpayers. And what this will allow the Inland Revenue to do is to contact those individuals and keep them engaged with their student loan obligations and, where appropriate, recover outstanding student loan repayment amounts. Because the thing we can't forget, Mr. Chair, when we're talking about student loan borrowers and even more student loan defaulters, is when a New Zealander has signed a contract with the government to undertake a student loan, it is a legally binding agreement under which they must abide by the terms. And for me, it is just incorrigible to think that someone may head across to Australia to avoid paying off their student loan after arguably drawing the benefits of that loan in order to get educated or do whatever people do with student loans. But the thing about this, Mr. Chair, and this is where it is quite clear, is that an amendment to the Tax Administration Act, the 1994 Act, this creates an exception to the taxation secrecy provisions. Because the one thing that the IRD values more than anything, and what its whole integrity is based upon, is in fact maintaining the secrecy of individual taxpayers. So, you know, no one knows what anyone else is doing, and my personal view is the IRD does act with complete integrity in this instance, and they have a number of clauses and terms and conditions in individual employment contracts which ensure that all staff members know that they have to maintain the integrity and the secrecy of each taxpayer. So this is the interesting thing about this. What this does, this clause does, is it limits who in the Australian Tax Office is authorised to receive the information from the Commissioner of Inland Revenue. Again, this just maintains the integrity of the tax system. But what it also does is the information that may be provided by the Commissioner is prescribed and must be relevant for the purpose. What I mean by this, Mr. Chair, is that the IRD cannot go on a proverbial fishing exercise. So they can't say to the Australian Tax Office, we want everyone between the ages of 21 and 28 between A and Z who holds a New Zealand passport that's registered with these names. And this is the interesting thing. They can only go after those people whom they know have a student loan and who they suspect may be living in Australia. And when I say suspect may be living in Australia, the bill is actually quite clear. They don't have to prove they're living in Australia, they just have to suspect they're living in Australia. But this is again, when we come back to a common theme, they have to actually know what they're looking for. If you don't know what you're looking for in tax law, then you will never ask the important question to get the information. And we've talked about overseas trusts and this sort of thing. I don't want to bring that up again, Mr. Chair, but it is a great example when someone says, well, you know, we have a transparent system. Well, how do we know it's transparent? Because those who are seeking transparency, they will never ask questions or they'll never seek answers for questions they don't know whether to ask or not. And it actually, Mr. Chair, it would be good for the Minister in the Chair to speak about this. And the reason I say this is because I have a suspicion that Mr. Foss is an expert in this. I know he's a financial whiz. He has worked overseas in financial markets. And I say this in a positive, not a negative, and I would like to hear his views on how this legislation compares to other pieces of tax legislation, and his views on whether he thinks this is consistent with other pieces of legislation. The other clauses I would like to talk about, Mr. Chair, are clauses 8 and 9. Now, this is the treatment for over-recovered additional deductions. Now, a bit of background on this, Mr. Chair. The Commissioner of the IRD is able to require New Zealand-based student loan borrowers' employer, i.e. the boss of a student loan borrower, to make additional deductions from that borrower's wages and salaries to meet previous shortfalls in repayment obligations. So the Commissioner does this, is allowed to do this by law without actually seeking, Mr Chair?
Stuart Nash.
Thank you. Without actually seeking permission of the student loan borrower, him or herself. So what they do is they write to an employer, it must be in writing, and the Commission advises the employer of the total additional amount to be deducted, and by law, the employer must deduct this money from the employee's account. But it is also recognised, Mr Chair, that there may be circumstances which the Commissioner might have got it wrong, or the employer has deducted too much or something. So what it does, it ends up creating an inherently unfair situation for that employee or for the student loan borrower. And there's one thing that I think one of my colleagues talked about, and that is the inherent fairness of the tax system. It is one of the guiding principles of any tax system, but certainly the New Zealand tax system, and that is fairness. So what clauses 8 and 9 do, Mr Chair, is they allow a student loan borrower who feels that they are aggrieved by the Commissioner forcibly taking, or not forcibly, but by requiring an employer to take money without their knowledge, to apply to the Commissioner and say, hey, I think you have made a mistake, it has to be done in writing, and there is a whole set of processes that a student loan borrower must follow. But what it does allow, at least, is a sense of redress, which again is important, and I think just adds weight to the student loan bill. There's just one other thing I would like to mention, and it's a point of clarification, I suppose. A number of speakers have talked about deposits and income equalisation accounts and shareholders of closed companies. Income equalisation is an interesting topic, Mr Chair. What this is what it's intended to do is it intended to allow persons to carry on, initially actually it was agricultural, fishing and forestry businesses, but allows them to smooth their incomes over years where you may have massive highs and massive lows. And so this is where Part 30, Schedule 3, it talks about deposits in main income equalisation accounts. Again, it brings that notion of fairness. What it does allow, I believe, Mr Chair, is to avoid the aggressive sort of tax planning that some individuals may feel they want to enter into in terms of avoiding their obligations, which again is most important. But basically, what Clause 3 says, Part 1, Clause 30, sorry, Mr Chair, page 17, the borrower's adjusted net income is increased by the amount of a main income equalisation deposit the borrower makes for the income year. So what this is talking about is if the student loan borrower whacks in $50,000 into this equalisation account, then his or her income increases by that amount. Again, this is used as a smoothing tactic, which is fair, and it makes a lot of sense to be honest. But this just ensures that no one is avoiding paying their fair share. There are also, we've talked about borrowers in trust. There are also borrowers who are major shareholders in closed companies. And again, what the legislation does is it lists the different entities under which a borrower may be engaged in terms of just the normal, I would have thought, process of doing business. Companies, equalisation accounts, trust, etc., etc. But what it does do, and why we are supporting this part of the bill, is it introduces that level of fairness, but it also ensures, as mentioned, that people cannot, well, in my view, undertake the sort of aggressive tax planning that we want to avoid from our tax system. That's probably all I'm going to talk about for now. There still are some other issues that need to be clarified within Part 1, but let's see where we get to with the next speaker. Thank you very much.